Hey there, everyone. I hope you're all doing well today. Get ready to dive into a topic that's buzzing in the financial world and affects everyone from homeowners to investors: interest rates. Specifically, we're going to explore how far will interest rates fall in 2025. Now, this is an important discussion, right? So, let's break it down together. We're looking ahead to the forecast and outlook for interest rates in the coming months and what we might expect next year in 2025. What are your thoughts? Have you been following the trends? I'd love to hear your insights in the comments below while we chat about all things related to interest rates. First, let's talk about the current landscape. Interest rates have been quite the roller coaster ride, haven't they? With various economic factors at play, rates have fluctuated, affecting mortgages, savings accounts, and the overall economy. So, what's really driving these changes? The Federal Reserve is a key player in this game. Their decisions can influence how we experience interest rates in our everyday lives. When they decide to hike rates, it usually means tightening up on borrowing costs. But as we look into 2025, many are speculating if the rates will decrease. What's making people feel that way? Experts argue a few factors could push interest rates lower in 2025. For one, there are concerns about economic growth slowing down. An economy that isn't growing as fast might encourage the Fed to consider lowering interest rates to stimulate spending and investment. Have you noticed this trend in your own financial decisions? Maybe you're holding off on a big purchase because of current interest rates? And it's not just about growth. Inflation plays a huge role as well. If inflation rates start to stabilize or decrease, it opens the door for interest rates to drop. The idea is that if people feel more confident in the economy and prices aren't rising too quickly, consumers are more likely to spend. This interplay is crucial, don't you think? Now, let's chat about the case against falling interest rates. Some analysts argue that the uncertainty that lies ahead could keep rates higher for longer. Factors like geopolitical tensions, labor market shifts, or even unexpected economic reports might raise flags that keep the Fed cautious. Keeping rates high can protect against inflation but could also stir concerns about consumer spending. What do you think? Do you lean towards optimism or skepticism concerning interest rates? Your perspective really matters. Drop a comment below, and let's engage in this financial conversation together. Now, while some people are betting on falling interest rates, remember that predicting interest rates is like trying to forecast the weather. It's tricky and full of surprises. So, as we navigate toward 2025, it's important to consider what your financial strategy is. Are you thinking about buying a house? Investing more in the stock market? Understanding interest rates will help you make more informed decisions and plan for your financial future. So, hang tight as we continue to monitor these developments. Make sure to subscribe to our YouTube channel so you don't miss any updates about your finances. Trust me, you'll want to tune in to stay informed. Before we wrap up, let's recap what we've discussed today. We talked about the driving factors behind interest rates, the possible scenarios for 2025, and how these will affect our wallets. Remember, whether they fall further or stay steady, knowledge is your best tool in navigating your financial future. Thank you for joining me on this exploration into the world of interest rates. Don't forget to share your thoughts in the comments, like and subscribe if you haven't already, and let's keep the conversation going. Until next time, take care.